Good morning. Ira Epstein with your Morning Flash Update. And this update is for Wednesday, the 13th of December, 2023. Pretty soon it'll be 2024. Time 8:15 a.m. Central Time. They're already warning us the last days to get your Christmas shopping, the gift sent, otherwise it won't make it by Christmas, blah, blah, blah. Well, today's its own Christmas day. It's the Fed day. So we're going to get later this morning, actually this afternoon at 1 o'clock, the FOMC statement. That's Central Time. At 1:30, the Fed press conference. I think the Fed has to be pressed in the conference in a big way. Where and what causes the beginning of the declines in cuts in interest rates? They've got to be asking that. Now, the CPI numbers yesterday were not of the kind that gets the Fed to come out today and say, oh, yeah, we're going in the right direction. They have to say from that number that, no, they are in this sticky area. That doesn't mean they're going to raise rates. They're not. So I'll go on record. They're not raising rates today. I'll be shocked if they do. They could, but I don't see any reason that they would. So you got to look at that part of it. But then we had some reports today. Let me show you what I'm getting at so that we can talk about it. Let's go to the PPI. The final demand, 0. They expected it up 0.1, so that's a little softer. Ex-food and energy, 0. They expected up 0.2. These are in the right direction that the market wants to see. They revised the final demand from a -5 to a little bit better, but the personal consumption was flat in November too. These are the numbers the Fed wants to see. Now, it's no surprise that when you come to the mortgage market headline, I go right here to the refi, nearly a 20% jump. Of course, you went from 8% to 7%. Let me in that window. I want a refi. I get it. But I think a lot of people are sitting back, and literally, as soon as the Fed makes that first rate cut, whenever it comes, I don't think it's in the first 5 months of the year, but when it comes, this number will go bananas because everything will be falling, and you'll see those refis come in and new purchases. We get the EIA petroleum stocks at 9:30, and of course the FOMC meeting, as I just said. There's a lot of data out on Europe today. It is all weak as can be. It gives Miss Lagarde no reason at all to stay rough, none. So tomorrow we get the Bank of England. We're going to get the European Central Bank. We get the Swiss National Bank and Norge Bank. We get all those big central bankers coming out. They're expected to be holding and pause. But the pressure is on Europe in a major way to begin the rate cut. So when they cut, is that bullish or bearish the dollar? Because it gives the dollar, at first, an interest rate advantage. But the idea of the cuts is it's going to spur on the economy and give bids into those currencies because they're going to improve their current condition. So that's something we'll be talking about for quite a while. In the grain market, Argentina is now playing with grain taxes, so they're warning people, but they're saying the soybeans are not going to be part of that tax. So that put this market down right off the bat, 9.5 points. In the meal market, we were down pretty good today too. And the question, of course, is for meal, more supply coming in. Bonds and notes anticipating that the Fed, no matter what they do, there's no hike there, and this market has to decide at what point does it start galloping upward and taking yield out. Gold is still stronger than the silver. In the copper market, traders around the world are agreeing with my analysis as to what the Politburo and the Economic Committee that came out, they have come up with no plans at all. They talk a game. We're going to support, we're going to do this, we're going to do that, but they didn't do anything. So my guess is the fact that they didn't do anything now means they're probably late into the first quarter before we know exactly what they're going to do. In China, Evergrande looks as though they might have struck a deal with their creditors for another, how do I put it, forbearance. They're going to go out further with their debt. Why not? Who the heck wants all those properties? Tell me a firm that can do any better than they're doing of getting people to come back and buy them and do whatever. That's the problem. When there's no buyer, the guy that ran the company, why take the company down? You take everything you can out of the company, but you keep it running, just hoping that the company can resurrect itself and something good happens with all that. Now, we're going to talk about this and a heck of a lot more today because it is Fed Day. You want our emails today. You want to know what we're saying, how the markets are reacting, where's it going to affect things. You hear me talking about Argentina and the grains. OPEC came out with their new analysis as to what they think how 2023 is ending, demand, supply numbers for 2024. It's in my market report. I already put it out for the traders this morning. So you get all this, and you need this and a constant flow of commodity data. You don't get it. I subscribe to Bloomberg. I'm on Reuters. I'm on Market Watch. You don't get what we have. Believe me, there's nothing like it. So if you're really interested in looking how commodity people deal with the options, the cash markets, the spreads, forward looking, where are you? Go to iraepstein.com, free offers, Linn Research, and do yourself a favor, something that I think you'll fall in love with, our price counts on the free offers. You can move your cursor up to the top. There's an icon. When you go there, be sure to sign up for those. Take a look at what they are. These are all included if you have an account with us, trading account, or you're a subscriber to our research. But we will give you a free trial so you can see what you're missing right now. And believe me, you're missing a lot. iraepstein.com. I'll see you at the end of the day with our market wrap-ups. You have a great trading day.